today's discussion. So we have three esteemed speakers that are going to speak and lead us today in our conversation, which will be trading through the Victoria Falls Stock Exchange. So our first speaker is Vanessa Machingauta, and she is an experienced equities data analyst working under Interhorizon Securities in the research department. In her role, she mainly focuses on crunching data and analyzing market trends to come up with informed investment recommendations. She also has experience in management consulting and holds a mathematical statistics and economics degree from the University of Cape Town and has a keen interest in quantitative finance. So she would take us through the the different types of investment strategies. So she will be handling that. And before I hand over to her to take over, I'll just like to remind everyone to ensure that your mic is disabled. Most of them are disabled, but just ensure you're muted during the whole discussion. And if you have any questions, please do feel free to write them in the chat box and we'll address them once we are done with all the speakers. Thank you very much. I will hand over to you, Vanessa.
Okay. Can you hear me, Soundcheck?
Yes, we can hear you and we can see your presentation as well.
Okay, that's perfect. So thank you, Taro, for that. As you said, I go by Vanessa and I work under Interhorizon Securities. So today, I would like to thank you all for setting aside time to join us in our webinar. And then I will be taking you through the investment strategies section. So without taking more of your time, I'll get right into it. But for those of us who are yet to start on their stock exchange journey, I'll just give an overview of, stock exchanges, then I'll then go into investment strategies for context. So stock exchanges have been around since 1602. And then these have been a way to create wealth. So if you look at what the offerings that we have 64 different companies, and it would be a bit of an exercise to just say pick one or two and then hope that you make something out of it. So we are basically here in this webinar to just guide you on some of the things that you might want to look at for things to make sense for you. Okay, so we had this first stock exchanges starting in approximately 1602. And then you can tell that if you look at a 10-year horizon and 20-year basis, you can tell that stock exchange returns have more or less outpaced the returns that you get from other assets. So if you look at what you're getting for commodities, and then also returns that you're getting for bonds, and then returns that are being given for savings, and then also against maybe in the Zimbabwean context, the cash that you're keeping underneath your mattress, you can tell that stock exchanges have given better returns over the long horizon. So in that way, it's more or less of a good investment. So what I personally like about stock exchanges is that they're actually quite inclusive. And you see that if you look at last Friday's closing prices, right? We can start with the Victoria Falls Stock Exchange. African Sun closing price was around 4 US cents per share. And then if we look at the ZSC, we had dairy board retailing at sorry about that. We had dairy board retailing at 1.32 ZIG per share. So I think for most of us, that sounds quite affordable. So if we look at stock market performance from 2023, it wasn't necessarily a good year for the stock exchange, but I think that's also the nature of markets, that one year is a good year, then the next, our performance might be not as much of a good year. So in 2024, I think we have been seeing a very good performance from our stock exchanges. So for the ZSE, for instance, I think we're up around 38% in US dollar terms. And then the interesting thing about the market is that if you look at what we have, what I'm sharing right now, performance is not necessarily uniform. So you want to at least, maybe find the stock that will put you in a better position. But that being said, you can see that for ZB, we are up approximately 350% this year. So I think, that's the top winner from January to last Friday. But you can tell that you also have other counters that haven't performed as well. So I think I also need to give a disclaimer to all of us, or for those of us who really aren't traders that that aren't traders, that past performance is not necessarily a reflection of future performance. So it's not necessarily saying, okay, these top gainers are the ones that normally do well, because the market is actually very dynamic in nature. So we find out that, it's always a changing platform. So then moving on to the Victoria Falls Stock Exchange, I think that there have been a lot of interesting developments that have been happening there. So, for example, we've had a lot of quality counters that have found a new home on the Victoria Falls Stock Exchange. You trade on that platform in US dollars. And then I think our newest baby on the VFEX Stock Exchange were the Edgars, moving over to the VFEX, which brings our total listings to 14, including the Caromine grant. So you can also see that performance here is also not uniform. You have top performers, and then you also have other counters that haven't done too well. Moving on to the next slide. Okay, so then moving on to the actual section, which is basically your investment strategies, right? So we have, you might be asking, so which, investment strategy should I be, undertaking for me to end up in the section where they're the winners versus maybe the counters that, have performed well. So the thing is that you don't have, there's no uniform strategy because we are all different people with different needs. So I think in this webinar, you can see that we probably have people who are like early career individuals. So, probably people who are now in GT positions, you have mid-career individuals, and then there's also a possibility that you do have retirees in the same investor pools. So that means that as different needs, and then that means that you also need different strategies. For example, in my little slide, I've put young individuals and then also retirees in the same slide. So basically what we're saying here is if you're a retiree, potentially you're not looking into risky investments because, probably your earning cycle at this point is more or less diminished and you're looking at or you're living off your pension. So that means that you probably want, investments that are more or less on the safe side. And as opposed to a young person, you can afford to make maybe risky investment decisions. And then also assuming that you lose some of maybe your capital, you can always make up for it with future earnings. So these are some of the things that you need to be considering, Kuti, what is important to you as an investor. And then this doesn't also apply to individuals, but for also companies. You have companies that are maybe capital intensive. So that means that you probably need money on a regular basis. So that means even the level or the type of stocks that you're looking at, you're probably buying counters that are very liquid and you can easily go in and out and get the cash needs for that, for the season that you need. Okay, so on this first slide, we're going to be talking about investment strategies 101, which is one of the, the key things that you might want to consider. So the first strategy that we're going to look at is called passive investing. So I think this one is actually very beginner friendly, because what you're basically doing is that, you're accumulating shares over a long period of time. So remember at the beginning of our presentation, we did say that stock markets in the long run, there have been proof that you kind of make very good returns, or you do make a positive enough return, doing better than other asset classes. So you're basically buying shares and keeping them over the long run, and with the assumption that you know what, you're most likely just going to get the average market return. So it's very good in that it's very time intensive. You don't necessarily have to be doing a lot of research. You don't necessarily have to be looking at your portfolio all the time. But I think a pitfall of this, it doesn't mean that you just go and buy any share and say, you know what, I'll come back after 3 years and then I would have made my money. So some of the things that you need to consider here that you still need to look at what would be considered a good company. So some of the things you would be looking at, do they have a good management in place, and does that management actually have a track record of execution? And then the company itself, is it innovating enough that, you know what, it's still going to be relevant? And then it's also outclassing maybe its peers. So that means if you go back and come back after 3 years, the company still will be in existence. And, probably it hasn't been liquidated. So the strategy here, like I said, you're just buying and holding. And then also that means that even the short-term fluctuations in price, maybe the prices you buy at 10, then tomorrow it's at 8, then the next day it's at 6, then it's at 11. So you're not necessarily paying attention to all that noise and distortion that's happening in place. All you're doing is basically accumulating. So the small disadvantages that are attached to this strategy is that whilst maybe you're saving up on trading charges, and that in the long term, you're still in a profit position, you might be missing out on maybe, like, for example, you buy at a share at 5 cents, then it goes to 10 cents as at an all-time high, and then it comes back to 8, and then also you might miss out on maybe cashing out at a peak price, and then it never goes back to that price again. But I do think that as a start, this would be a very appropriate strategy for beginners, essentially. And then on the next slide, we do have active investing. Okay, so active investing are for those people who are very, very, very eager on the stock exchange. I'm not sure if you've seen this picture around floating on the internet that says me managing my $87 portfolio. So for this section, or for active investing, I think the key characteristics that you have to have is that you need to be someone who has your hand on the pulse. Your hand on the pulse. So that means all the trends that are happening within the stock markets. Price trends for companies, and basically what you're doing, you're buying and selling on a regular basis, so that if maybe your stock reaches an all-time high and you've been keeping track of that, you can easily just cash out and then look for another stock maybe that's priced better. So some of the people that are really into active investing, you can see that you have a lot of professionals, because this is their day-to-day job, and they know the trends. They also know the research that's needed to make correct decisions and everything else. But also, I think for young people as well who are really interested in trading, we do see that they do take active investing very seriously. But that being said, whilst you might there might be opportunities to make to for arbitrage, yeah, and to make some profit. I think some of the downfalls is that you actually need to be using accurate information. Otherwise, if you take information from any source, that might be problematic. And also, it doesn't necessarily mean that the information that you're using will actually materialize. So I think there's also a risk that maybe if you're not trading too much, the profit that you're actually making might just be overridden by the trading charges. So for example, you might trade and then let's say you make a profit of 2 cents, but your trading charges are maybe 3 cents. So that means that technically, yes, you've made a profit, but you're in a loss position. So these are some of the things that you might need to look out for if you are going to undertake in active investing. So on this slide, I've just given you like a basic subset of some of the companies that are available on both exchanges and the subsectors as well. So I think also, as I was saying, that if you're a first timer, it does look overwhelming because you're like, okay, which company do I pick? You have all these companies available and you wouldn't even know where to start. But another thing that you might want to look at when you're considering investing, I think you might want to look at income investing. So basically in the strategy, what you're doing, you're looking at those stocks, or we're looking at strategies that will yield you a regular investment. So when it comes to stock exchange, that means that you're looking for companies that give you a portion of their profits and return those dividends, right? So I've put a snippet of our IH valuation table here, which more or less tracks companies and also what we expect that at the end of the year, what percentage of the current price they'll give you as a dividend. So at the top here, you see on this is a VFEX one, First Capital Bank. We expect that maybe dividend as of the end of 2024 will be around 10.8% this dividend yield, and then BAT 2.3, and then as we go down the list. So it's not necessarily how we come up with this dividend yield is that we look at maybe the past dividend policies. Let's say they give 40% of profits to shareholders, then we try forecast that as well. So I think when you look at income investing, you're basically picking out those companies that have a history of paying out dividends, and then you focus on those. So you see that as you accumulate a lot of shares, it does make sense because you get a higher portion of dividends within the long run. So I think this is one of the really beneficial strategies that you might want to look at as a start. But that being said, even if us as analysts do focus that maybe, let's say for ENSCO, we say that they're going to have a dividend of 4.9% as of the June year end, right? It doesn't necessarily mean that that's the dividend that's going to materialize. So even if ENSCO hasn't missed a dividend in the past, let's say 3-4 financial years, maybe something will come up, profitability can change, or maybe they're just taking the money and reinvesting it into the business. So these are some of the things that you need to consider, that as much as, maybe a company does have a history of paying dividends, things might change in the short term. But overall, I do think that this is one of the most important investment strategies as well. And then moving on to the next strategy, we talk about value investing. So Tinashe will delve more into the technical aspects of this. But basically, I think here we're looking at the mantra that says, you know what, you want to buy your stocks low and then sell them at a high price. So there are a lot of things to look at. We're going to look at fundamental analysis. Tinashe again will take us through that. And then basically for this one, you really need to know your financials and your fundamentals well, so that you can look at historical performance and then maybe spot with okay, where the stock is trading relative to what it's actually worth. There's a big margin there, then you can buy into that stock, and then when it recovers, you also you can also then cash out on your profit. So these are companies that are trading on the Zimbabwe Stock Exchange, Company A, Company B. And you can see that if you had bought shares, maybe like, okay, if you bought the shares maybe in January 2023, that's also a low. And then January 2024, also a low. And maybe you can tell that related to the target prices, which I have in the background, that there's a very big margin there to be made. So it's also a good investment strategy, but this one, I really need to know what you're doing. But the positive thing is that in this market, we have a lot of quality investment or research houses that are available, IH being one of them. So if you can always sign up to a mailing list, and they tell you that, okay, fine, this company, the last price was, let's say maybe 5 cents, but it's actually worth 15 cents. looking at financials, the business model, and also looking at dividends and everything else. So that means that, you know what, we would recommend that if you do have the funds, buy this company. So that's also one of the ways of maybe just getting into value investing. And the bigger the difference in what it's worth versus the current price, that means that there's a big opportunity for you to actually realize that margin. So that is the investment strategy on value investing. So that being said, I think we've talked a lot about, you know, how like profits are not necessarily guaranteed, and you know the market can move in either direction. You can buy low and the price can still go lower. And there's a lot of things, there are a lot of dynamics that affect the stock market, especially within our country, right? So some of the things that you might be able to do to maybe hedge the risk a little bit. It doesn't, you can't necessarily diversify yourself out of the risk. But some of the things that you can do, I think the first strategy would be to diversify. So what we're basically saying here is, instead of maybe putting all your money in one counter, you can spread them along maybe more counters or more companies. So on the end, then the price is correct, that means you're in a loss position, or maybe counter A is not performing so well for other reasons, right? But assuming you have counter A, counter B, counter C, counter D, that means even if maybe two of your portfolios or two of your companies are not performing well, the other companies will basically balance the performance of your entire holdings. So diversification is the first risk management strategy. And then dollar cost averaging as well. So as you can see here, sorry, give me a second. Sorry, I'm just having some challenges here. Okay, as I was saying, sorry, let me just fix my presentation.
Good morning, is it possible? All right, whilst we are waiting for Vanessa, I would also just like to let everyone know, because I see we have a couple of people who've just joined. If you have any questions, please do write them in the chat box, or you can note them down. And when we have our question and answer session later on, you can then read out your question and it can be addressed.
Okay, just checking if we're back up. Okay, that's fine. So we were talking about dollar cost averaging. So that would be our next risk mitigation or mitigation strategy. So as opposed to buying all your shares in one place or at one go, you never know how the market is going to move. Yes, as I was saying, that you can think that the price is low, but it can still go the other direction. Or maybe, you know, there's a really good opportunity to buy shares at a certain point. So instead of maybe buying shares in one lot and then, you know, the price goes maybe down or up, and then you're not too sure how that's going to turn out, you can buy your shares over a longer period of time. So basically what you're doing, you're basically spreading the risk that, okay, maybe I got this batch at 2 cents, this one at 3 cents, this one at 250 cents. So that means that if you average over a longer period of time, you're probably going to get a better return, because it kind of just sorts itself out in the background. So you want to buy shares in different tranches at different times, just to maybe remove that risk of buying at peak prices. Then the other thing we have to talk about, I think, is profit taking. So I think the nice thing about the stock exchange is that at times you can see that, okay, the market, like I was saying, the market is at 38% in real terms. And, that might be a very good thing. But also, I think some of us, if you are not taking a long-term approach, you might forget that once in a while, it's okay to maybe just take out some of your capital. Let's say maybe you bought in $100, and then that $100 is now with investment is now sitting at 150. It's okay to take out some of your capital, and then that means that even if price is correct, like the price is correct downwards, you have taken out some of your capital and you're not still exposed to that. So stock markets have cycles, and I think one of the things is that if your profit does make sense, you might want to hedge that by just taking out some of your profits once in a while. And then also, like I said, Zimbabwe is actually a very interesting environment. So you find out that maybe a company which was once performing well is now not necessarily, pulling the figures out. Maybe they've stopped paying out regular dividends, and that was the main reason you had invested in them. So rebalancing is also okay. If after a certain while a company is maybe not performing to expectations, what we mean by rebalancing is that you can just sell and then maybe look into another company. You don't necessarily always have to be stuck with one company in the long run. So I think that's about it from my presentation, and I thank you so much for attending again.
All right, great. Thank you so much, Vanessa. We really learned a lot from your presentation, and I think you've really added a lot of value. For any of the team members who've just joined the meeting at the moment, thank you so much for joining us, and we will share with you the presentations. I see that is something that has been asked in the chat box. So our next speaker is Rubidzai Munyali, and she works for the Victoria Falls Stock Exchange, and she works under New Ventures. So Rubidzai joined the VFX a year ago and works in the New Ventures team. She holds a bachelor's degree in public administration and management from Africa University. During her academic journey, she developed a keen interest of organizational dynamics and effective management practices. Her career path blends both her educational background with her passion for client relations and marketing. Her professional journey began with roles that have allowed her to interface directly with clients and at the exchange. She works closely with client engagement, equipping her to tackle today's topic on getting started on VFX. So she will be touching on how VFX Direct works, demos of the system, and cover the settlement cycle as well. So could you kindly welcome Rubidzai to be the next speaker? Thank you.
Thank you so much, Terry. As she said, my name is Rumbizai Munyavi, and I'm going to be taking you through my presentation. Just to confirm before I share my screen if I'm audible, can you hear me?
Yeah.
All right, thank you so much, Terry, for confirming. So bear with me a moment whilst I try to share my screen.
Aitapiwa, Rumbizai, I don't think we can hear you. You're still on mute.
Can you hear me now?
Yes, you can.
Okay, that's fine. So let me just, and you can see my screen as well.
Yes.
Okay, that's fine. So let me just restart on what I was saying. So I was saying that from this presentation, I'm going to be touching base on these three sections. So the first section that we're going to be talking about is how the VFX Direct works, which is post-registration. I'm going to be talking about the demonstration of the system and just a little bit of the settlement cycle and how it works. So from the first section, I'm going to just tell you how you can open an account on VFX Direct and the requirements that are needed so that you can open an account. So these are the following prerequisites for one to open a VFX Direct account. So the first one is you must be at least 18 years of age to be considered eligible. This is on the app, not just regular trading. You can trade through a stockbroker, but if you want to use the application, you need to be 18 years and above. So for the documents that are required, you need your national ID or a valid passport. And in brackets, it states that the driver's license is not an acceptable proof of identity. So you need either your ID or a valid passport. And then for the proof of residence, you need to show a statement that clearly shows the registered name as it appears on the national ID. And the documents that are required, it's either a utility bill, which is in your name, that is not older than 6 months. You need a bank statement of at least 3 months, but stamped from your bank as well. If you're renting, you need an affidavit from your landlord or a lease agreement, a letter from your employer as well, or a letter from the council or the village head. So also you will need a valid email address and phone number. These are going to help you for the registration process. You also need a Nostro bank account with any of the commercial banks registered here in Zimbabwe. So for the bank account, you can also use Inbox as a way of depositing funds into your account. But for withdrawing funds now, you definitely need a bank account for now. So how you then open an account on VFEX Direct. So the registration process is done on the web portal, which is the www.vfexdirect.vfex.exchange. So this is a website that you can visit to start your registration. So the first section of the registration is to select a stockbroker. So we have a drop-down menu that shows all the 13 stockbrokers that have been onboarded right now on the VFEX Direct. After you've selected your stockbroker, you confirm and it redirects you to the next tab. The next tab now, you enter your personal details and you create your password. You click on submit, and then you go to your email to check the verification, and then you come back to the VFX Direct and then log in the details that you have registered with. So this is your password and your email address. So after you have gotten logged in, you then need to add your banking details. You save them. You then upload a picture of your ID or your passport, a picture of yourself as well. When we're talking about a picture of yourself, the most preferred picture is your passport size photo or a picture that clearly shows and matches the picture that you would have provided on your ID, and also your proof of residence. And this is needed in PDF format. So after you've done with the whole process, it means you're done with your registration. Then you submit the application. So the application will be processed within 48 hours. Since this is not an instant account, it will be processed within 48 hours. So this is from the VFEX Direct side and the broker side. So what we do now is we look at the account, we look at all the information, all the details. If all the details are correct, if everything is in order, we then recommend the account to the broker, to the selected broker that you would have registered with, and then the broker now allocates you what is called the EDS number. So the EDS number, in simpler terms, it can just be for example, it's just a bank account. Let's just say it's just a bank account number where your holdings are now kept. Your holdings are the shares that you would have bought through the exchange. So after the EDS number is allocated, you can proceed to top up your wallet through the bank or Inbox. So the US dollar funds take about 72 hours if it's a transfer to reflect in your account. This is 72 hours is like maximum. and this is excluding weekends. To reflect, once funds are credited into your account, you can proceed to buy when the market opens. So the market opens at 9:30 and closes at 1. This is on the VFEX Direct. The market opens at 9:30 hours every day, excluding weekends and excluding public holidays. All right. So moving on with the presentation, we have what are called the trading costs. So whenever you were buying or you were selling, there are costs that come with it. So these costs, the ones that are listed here. So we have what's called the dealer's commission. We have the VAT. We have the Central Securities Depository Levy. We have the stamp duty. We have the VFX levy. We have the Securities and Exchange Commission levy. And then below here, we can see that there is a total, which is 1.277%. This is the total on buying, and then there is 1.027%, which is on the sell side. So these are the costs that are charged when you're buying, either you're buying your shares or you're selling them. So moving on, we're going to be doing the system demonstration. So on the system demonstration, could you allow me to stop sharing my screen, and then I could reshare it? Let me just do that. Okay, just to confirm, can you see my screen? All right. So when you go on the VFX Direct, so basically you just type in the link. This is a VFX Direct link. You type in the link and this is your landing page. So on the landing page, when you're registering, I was talking about how you can register on the web. This tab says register and start trading now. So when you want to start trading, this is the link that you click. And for now, I want to show you how the system actually works. So since I already have an account, I'm going to log into the account. Okay, so this is the dashboard of the account. So this is basically the VFEX Direct. So we're seeing that from the dashboard, we have the My Wallet tab, and we have the Buy Order tab, and we have the Sell Order tab. So when we just get onto the dashboard, we're seeing that the account owner already has an EDS number. This is the EDS number, so it shows you your EDS number. Also, it shows you the portfolio valuation. The portfolio valuation is the total of your trades yesterday's value and the number of trades that you have, which brings the total to $7.12, which is combined all these holdings. So we're seeing that from this account, this specific client has Bindura, they have Edgar's, and they have Insco, and these are listed here. So it lists the name of the counter, the holdings, the closing price, yesterday's value, and then today's value. So also on the dashboard, there are these companies that are coming out on top here. They're showing the company codes. This is called the ticker. So the ticker will also show you the percentage change. So it only comes up when the market closes, because the prices right now will not be stable. The prices will be going up and down. So it only then shows after to just show the change for the companies. So this is basically the dashboard. So here we also have a market snapshot. So the market snapshot also shows all the total registered companies that we have on the Victoria Falls Stock Exchange. So we have these 14 companies. These are the companies that are listed currently on the Vic Falls Exchange. So how the system works now. Since you're a first-time client, you probably need to deposit funds. So you click on the My Wallet tab. So after you've clicked on the My Wallet tab, you're able to see your statement. So when you click here, you're able to see the statements that you have, which is the transaction history. And here now, you can see the wallet top up. You can either do a bank top up. So when you go to your bank, it clearly shows the banking details that you would have registered with. In this case, it's a Stanbic Bank. And then on top here, you then put in your amount. So for example, let's say we want to top up $20. So this is in US dollars. Please note that the minimum deposit that you can do is $10. So here we're going to initiate a deposit of $20. So already there's a pop-up that's going to say, are you sure you want to initiate a deposit of $20? And then you confirm yes. So after you have done this, you then go to your bank and then use these following banking details to then deposit money into the VFEX Direct account. So you take these banking details, you go to your bank, you then send the money through, and then you proceed to OK. After you've done that, you come back to the application, you click on the attach POP, you attach your proof of payment, and then we now can see the account through the VFEX. So this is for topping up your account using your bank. So when you want to top up your account using Inbox, you go on the Inbox top up. Here it clearly states the minimum deposit is 10, the maximum is 250. This is for Inbox. These are the details for Inbox. So what you do now is also here, you put in the amount and then you submit. After you submit, you're going to receive what's called a 2D code. A 2D code is the one that you're going to go to your Inbox and input and then transfer funds also onto the VFEX. So this is all on top up. So on the Inbox as well, it's going to show your account number, your mobile number that you would have registered with, and your ID number as well. So right now, we're going to be looking at the buy tab. So on the buy tab, what you do now is, so on the buys, you need to select a counter. So the counters are the companies that are listed. So for example, let's just select African Sun. So what comes up here is called the market depth. So the market depth feature shows all the available orders in the market. So this is the volumes, and there's a volume, which is the bid volume, the ask volume. So this is showing the people that are selling. It's showing the buyers as well. So the blue side are the buyers, the red side are the sellers. So this is the bid price as well. These are the prices that people are also putting in. So what you do now, for example, let's say you want to buy your 100 African Sun shares. So here there's the price range. If you can see here, we have highlighted. These are the prices. This is the range of prices that is there. So you can only input a price that is within this range. So from seeing here, these people are also putting prices that are within the range. So what you now do is you then select a bid price that is in the range. So for, in this case, I'm going to select 0.033 because I would want to match the other orders on the market depth. Right. And then here it shows you the total cost before your charges. So the total cost before your charges are the volume times the bid price that you would have put in. So now you place the order. So here I'm not able to confirm because the wallet does not have money. So if your wallet does not have money to fund the wallet, but here you can see that the bid price, you can confirm the volume is 100, the bid price is 0.033, the total charges are $0.03, then the total then comes to $4.33. So here the wallet balance should show if you have funds in your account. And then also you can cancel. Let's say this is not the order that you wanted to place, you can cancel and then you can go back, you place another order. So this is basically how the buy order works. So for the sell order side, you can only sell, we don't allow short selling, which means this is selling counters that you don't have, selling shares that you don't have. So in this case, we have Edgar's, we have Insco, we have Bindura. So in this case, let's say we want to sell our Bindura. The volume that we're going to input, since we have 200, we can put in 100, and the ask price. So this is the price range of Bindura. So for example, you could put in 0.01. This is the price range, and it shows the total cost before the deductions. So here the deductions, because when you sell, they need to then take those charges I was talking about on the transaction cost. So you also place your order here, and then you go to the next page. It's going to show you where you can now confirm that you want to place that order. So I think this is basically what the VFEX Direct does. It then shows you, I was talking about the portfolio. It shows you your holdings, and yeah. So right now it also shows the market status. The market status right now is currently open. So the market is open right now. People are actually trading. So that's why we could not continue with our orders, because it's on the live environment. So I think I'm done with the system overview to just share how the system actually operates. So I'm thinking I could just go on with the settlement and just continue with how the settlement, what the settlement is and how it works. So the settlement is basically when you're exchanging your shares, you're buying shares, you're exchanging there's a buyer and the seller to make a trade. So the settlement is now the process of you seeing the holdings after they have been put into your account. So let me just share my presentation again so that we could just a moment. Okay, so when you buy or sell shares in a listed company, you must exchange the title or legal ownership of the shares for money. This exchange is called the settlement. Shares purchased will be credited to your CSD account on the settlement day, which is the transaction day plus 3 working days. It's called the T+3. That is, if you purchase shares on Monday, they will be credited to your account on Thursday. Subject to payment being made for the same, if you sell shares, payment will be made on your settlement date through your stockbroker or your custodian. But in this case, on VFEX Direct, you can only then see, let's say these are funds after you have sold your shares. After you've sold your shares, the funds will only start appearing in your bank account at T+4, meaning that the stockbroker or the custodian would have sent this. They can only send these funds to you on T+4 since they receive these funds on T+3. So the last slide, which is a settlement cycle, this is basically what an overview of what the depository does on its side. So clients, this information might not be necessarily be relevant to clients, but it could be just a summary to just know how the depository then works. So on T+0, that's the execution. This is when the trades are done. So the T+0 is today. Today is a Wednesday, and I'm placing my order on Wednesday. So the trades execution on the ATS by the stockbrokers. So the ATS is basically the automated trading system that we use as the Victoria Falls Stock Exchange to place orders. And then executed trades are sent to the EDS, which is the depository in real time, and the trading affirmation begins. Then the initial pre-settlement reports are sent by the CSD to the respective custodians. And then on T+1 and T+2, this is when the clearing is done. So all trades to be affirmed on T+1 by 3 trade allocations and reallocations. Necessary pre-settlement adjustments are done. The final settlement obligations are established. The final pre-settlement report sent out to the custodian bank on T+2. And then the T+3, which is the settlement. Funds settlement at the RBZ at 10, T+3. Upon confirmation of the funds settlement, the securities settlement leg is executed. So this is basically what the settlement cycle is. So for VFX Direct clients, what you really then need to know is that when you buy your shares on Wednesday, today is a Wednesday, this is the T+0. Thursday is going to be your T+1. Friday is going to be your T+2. Monday is going to be your T+3. So these shares settle in the EDS at T+3. But on the VFX application, it's going to show tomorrow morning at day start. So you start seeing your holdings on Tuesday after we have started our day. So I think this was the basic overview of the whole presentation that I had for you. So if you have any questions, I think you can just make use of the chat box like Terry had mentioned. Thank you so much for your time. Thank you so much, Terry, for having me for this presentation.
All right, great. Thank you so much, Rubitzai, for your presentation. I think we all got a thorough explanation of how VFX Direct works, and I'm sure a couple of questions have now been answered as to how you can go about the process. So moving forward, we will now have our next speaker, but right before I continue on to that, I do see we keep having new people joining. So if you have any questions from the presentations that we are having, please do type them in the chat box, or you can write them down. And once we are done with all the presentations, you can raise your hand and we'll give you authority to have access to your mic and you can ask your question. So our next speaker is Tinashe Makamore. He is a portfolio manager and investment analyst at Imara Asset Management, where he primarily focuses on institutional portfolio management and equity research. In his role, Tinashe helps oversee multi-asset investment strategies and is part of the Imara Asset Management Investment Committee, where he contributes to macroeconomic research and overall strategy development. Tinashe has been a CFA charter holder and a member of the Chartered Financial Analyst Society UK since November 2023. And he holds a Master of Science in Financial Mathematics from the University of Warwick and a Bachelor of Science Honours in Mathematics and Finance from the University of Manchester. So Tinashe will be handling a practical analysis of a counter, a fictitious counter that he has created. So I do encourage all of you to have pen, paper, and a calculator to just follow through from what he's going to share with us now. So I hand over to you, Tinashe.
Yep. Okay. Thank you so much for the introduction. I'm just going to try share my screen. Please let me know when and if you can see it. Anything yet?
No, not on my side. Not yet.
All right. Now?
Yet.
Pardon?
Not yet on my end.
Not on my side either.
Yeah, sorry, I can seem to get the camera working, but I'm just trying to share my screen. That doesn't seem to be coming up. Just give me a second.
Not a problem, Tinashe. We'll just give you a second. If it doesn't work, perhaps I could present on my side.
Try one more time. Yep, you have my presentation, so I think if you can maybe just share that and then I'll speak over it.
That's noted, Tinashe. I'm just getting on with it.
Yeah, okay, great. I can see my presentation, I guess, on Terry's screen. So yeah, I will actually just sort of hop into it. And as Terry said, I'm going to be presenting on the practical analysis of a counter. Again, I understand that there's a lot of new investors and a lot of people making their way onto the market for the first time. So as much as there might be some technical points of view, I will try to keep it high level and sort of touch on key points for you to take away, especially as you get into your investment journey. So just that first slide on the disclaimer, as much as I do use real numbers and extracts from some listed companies, I do want to emphasize that this is, again, a practical sort of approach and a teaching of a framework, and not to be taken as investment advice. So there will be a counter that I'm going to look through, an example of it, and it's going to be a buy recommendation. But again, this is not to be taken as a buy recommendation in real life. I do encourage you to actually take this framework and I guess use it going forward in terms of your further analysis. So yeah, just on the first slide on just the analysis framework, Terry, if you can go to the next slide. So this next slide is just an overview of some of the sources, or rather a starting point for anyone getting into investment journey. So again, I'm primarily going to be focusing on the company analysis aspects, but I will sort of take you through to the level 2 of the pyramid, which is looking at the context of the company, as well as further forecasting and valuations. I did include some primary sources, which is where you'd get the information for any analysis that you're going to do. And just for this, if you go to the ZSE or the VFEX websites, you will be able to find company annual reports and financial statements. And again, things like your income statement, your balance sheet, your cash flow statements. These are going to be the most important sort of primary sources for any analysis you're going to do. I did also include the analyst briefings. One of the good things that sort of came out of COVID is that a lot of briefings have been done online, and companies are more than happy and willing to share the presentations on their websites. So again, that is another source of information, both on a company's performance, as well as just getting a broad overview of what a company does. In terms of secondary and third-party sources, I've also included sell-side research reports of the multiple brokers in the industry. A number of them do have research departments, and every time a company releases results, they do a brief analysis, show you what they think on it. And again, this can be a great source of information for anyone looking to get into the market, looking to do their own analysis as well. So just kind of breaking that down, going to the next slide. In terms of the first step of the company analysis, just what I call determining the business model is probably what's going to be your first step. Again, this is just asking yourself, do I know what the company does? Do I understand it? And again, that's going to form the foundation of how you then proceed in the analysis. Again, from there, I'm then going to move into explaining how you can look and analyze revenue, things like profitability, and then as well how a company invests its capital, be it debt or equity. I'll then move on to, again, that context, that second level of the pyramid, in terms of comparing the company, not only with itself and its past, but again with its peers and again other companies in its industry. I'll then at the end touch on, again, forecasting and a bit of valuation. But again, that is when it gets very technical. So again, I will give you a high level overview of that. But again, just going back to the first step, and I guess the next slide, Terry, just on, I guess, determining the business model. So again, just when you look at a company, especially for the first time, the one thing I do encourage any new investor is to not discount any information you yourself know about a company. It's very important, especially when you see companies, when they operate, especially in your environment. If I say a name like a Delta or Symbisa, everyone already has a sort of understanding of what the products are, what they do. But again, I do sort of encourage you to do further analysis. Again, look at annual reports, company websites, just news articles, and get a deep understanding of what a company does at its core. So again, there's that first question. Just ask yourself, what does the company sell? I think once you sort of understand that, that's about 50% of getting to understand the company. From there, you then look at where does it sell to, who does it sell to. I know something that's become very topical in this country, especially in the last few, I'll say months to years. You ask yourself things like, okay, this company sells product X, it sells it in these regions. What currency are they getting? Are they getting local currencies, ZWL or ZIG now, or are they getting US dollars? And again, this can help you, especially when we live in a very confusing environment where sometimes numbers in one currency and you have to do conversions. So again, just in terms of understanding a company's business model, these are the questions you want to be asking yourself. And I'll say finally, I guess, in terms of understanding the sort of product line of a company, you ask yourself what's happening on the other side of it. What are the inputs? Where do they get them from? How competitive are the producers and sellers of those products? So again, once you have this, once you understand the company's business model, this again, like I said, forms the foundation of any further analysis you do. Next slide. So yeah, I would start with, I guess, analyzing revenues, which is usually the first line in any company financials. And broadly speaking, you can do it from a top-down analysis or a bottom-up approach. The bottom-up approach starts with looking at a company specifically, looking again at its sales volumes, what drives those volumes, what different segments and geographies does it operate in. And I think for someone who's new and getting into company analysis, this is probably the easiest and most straightforward approach. Again, companies are willing, especially at briefings, to give you this information, not only in terms of past historic trends, but at the same time, what they predict they look for in, say, the next year. The top-down approach tends to, again, be more technical, so I won't really go into that, but it comes down to starting from a higher level, again, forecasting your GDP growth, seeing how that then translates into your revenue. You look at a company's market share and the market size. So again, these are just things to think about when you're looking at a company, especially its revenue. But yeah, I would recommend more for bottom-up approach, especially for someone getting into it. Just the bottom off of that slide, that is something I left in for, guess, the few of you who may be more technical and maybe already have a few steps into the sort of idea of analyzing the company. This is just, again, once you've done an analysis of a company's revenue, the idea is, again, revenue is the first line, but you want to understand how that revenue then converts into, in this case, operating profits. This is just something we call degree of operating leverage. Again, you probably don't need to be too concerned about that if you're analyzing a company for the first time. But again, I'm just trying to encourage you that these are the sort of things, the sort of formulas you're then going to be looking into, again, as you progress on your journey. If you go to the next slide, I did mention at the beginning that as I go through these examples and highlighting the framework, I will be giving an example of a fictional company called Allen Corp. Again, just for opaqueness, these numbers are derived from a listed company. But again, to avoid this being taken as investment advice, this has been packaged as Allen Corp. So again, just looking at the last, like I said, revenue is going to be the first line in your financials. And the first thing you're going to want to do is try to understand and pick up a trend. So again, in this case, your revenue was up 43%. And I think one of the first things you want to see in a company that you're going to want to buy into is consistent and positive revenue growth. While this slide just shows the difference between 2023 and 2024, again, you would like to see a pattern of revenue growth. It might not be every single year, but over a long period, you do want to see that a company is growing, it's expanding, and at the same time, it's taking that revenue growth and converting it into that bottom line, that profit after tax. So again, this analysis not only looks at revenue, but you look at the growth and say your operating income. And again, it's kind of important to note here that as much as revenue grew 43% in this example, your operating profit grew 52%. So I think that then speaks to that degree of operating leverage. Again, when you look at a company and you see, okay, I'm forecasting 10% growth in its revenue, that could be more than 10% in the operating profit and I guess in the PAT growth as well. So that is that line at the bottom I've highlighted in blue in terms of degree of operating leverage. Again, maybe for the more technical of you, but again, as a sort of starting basis, just having an understanding of revenue growths and profit growths is sort of the key sort of initial steps you're going to want to take when you're analyzing the company. Just moving on to the next slide. Again, speaking of the environment we do live in, especially when the currency is changing and it's very volatile, one of the things that I do and a lot of the people I work with tend to do as well is maybe you might want to look at volumes growth if the raw numbers in dollars or in ZWL, ZIG aren't making sense to you. Something that's more solid and more fundamental is looking at a trend of volume growth. Again, here I've expanded more all the way to about 2020. And what you can see is that as much as the growth isn't, north of 20% every single year, 2021, you had a growth of 16%, 2022, 30%, back to 16%. I think the main idea and main takeaway from this analysis is that it is on an upward trend, and it speaks to how the company is growing and, again, how you expect it to expand. For anyone who might not know, CAGR just stands for compounded annual growth rates. That's just an annual rate that sort of summarizes those individual 16 and 30 and 16 and 13% into one solid number. Again, you do want to then obviously compare this number to, again, companies in its peer group. Is it growing faster than its competition? And again, that will give you more context and, again, how the company is performing and how you can expect it to perform going forward. The next step, again, if you go to the next slide, in terms of company analysis, this is more looking at now the balance sheet figures, which tell you what a company is sitting on as a snapshot. And in terms of, it also gives you an idea of how a company is using its capital. As much as you know, lots of companies tend to raise money through equity, which are the stocks you'd be buying on the ZSE or the VFX, as well as debt instruments. Again, I would ideally want a company, or rather what you would want to look for in a company, is a company that's low levered, or rather with low debts, but can still use the debt it does have or the current capital equity it does have to be able to leverage that and return and give you decent returns. Again, going back to some of the more technical aspects, I did include a figure called return on invested capital. And again, that essentially takes your company's operating profits and divides it by what the sort of basis is in terms of capital, which is the total equity and debt. And what this does is it gives you an idea of what the return on a company is, both sort of internally and sort of outwardly going to your debt holders. I know when Vanessa was speaking, she did speak about dividend income, and that's money coming directly into your pocket. But a number like return on invested capital might look at the money that a company might have over for dividends, but as well as the money that a company might keep internally, again, to generate more capital and generate, to put into capital expenditure and grow its operations. So again, this is a difference between dividends, which is what you then hold in hand, and comparing it to ROIC, which is what the company can actually then use itself to grow and expand, and then maybe increase its dividend yield in the future. So just kind of going back to the example on the next slide. The next slide is broadly just, again, a snippet from the from the income statement. Again, this is where you get your operating income. And again, as I mentioned, you're looking at financial leverage. Here, as much as your operating income grew 53%, you find that your net income grew 59%. And so what that speaks to is to how a company is using its capital. As much as if there was no finance charges, if there were no cost of interest, you'd find that as operating income grew 53%, your net income does grow 53%. But this company, I guess Adam Corp, is using its debt capital in a very interesting way, and is able to grow its bottom line faster than it's growing its operating income. Again, you don't need to concern yourself with what degree of financial leverage is, but again, once you do get to that extent where you can look at these formulas and understand them, ideally you want a ratio higher than 1. And again, hopefully in future I can have an opportunity to maybe explain the more technical things to you. Just move on to the next slide. This is again just carrying on the example of that, calculating that return on invested capital. As I said, you do start from your operating income. There are certain adjustments to sort of go from operating income to sort of pre-interest income, which is what's called NOPAT in this case. And again, just looking at that balance sheet, when you're looking at your shareholders' equity, which is your net assets, total assets minus total liabilities. Here in this case, this company's shareholders' equity is about 200 million. And you find again that its total debt is only 23 million. So you have a debt to capital ratio of just under about 10%, which again, in an environment where interest rates can change and they can be very high, this is a good thing and something you would want to look out for in a company. So again, you find that for this specific company, it has a very high return on invested capital of 46.5%. And this would obviously be in contrast to, again, say your dividend yield, which in a good case would be sitting at close to 6, 7, maybe 8%. And again, this then speaks to how much revenue the company converts into earnings, which it then uses internally again and drives that volume trend we saw earlier. So yeah, just as a summary of everything we sort of picked up, I guess, in this analysis, these are the sort of things I would look for and the sort of numbers I would be trying to look at for a company when I say, okay, this is a company I would want to invest in based off its financials. These are good numbers. Again, we saw positive profit growth. We saw positive revenue growth as well as positive volumes growth. Margins were again positive, and again, return on invested capital shows that this company is taking the capital it's using and investing it wisely in terms of, again, making capital expenditure, growing its volumes, and again, increasing those margins. Yep, again, as I did mention, the dividend yield is only 4.5%. And again, that might only speak to what you have in hand. But again, is that return on invested capital that's going to tell you how much the company is going to grow in future from a book value point of view. And again, maybe even speak more to your capital appreciation potential going forward. Going on to the next slide. Once you sort of have this understanding of the fundamentals of a company, again, just looking at this chart, that company profitability is what we've just looked at. Again, the robustness of, its revenues and its profits. What you then want to look at is this company in the context of, where it operates. Just an example, again, I think if you saw my references, these numbers were broadly based, or rather Allen Corp is modeled on how Delta works. So the example I do give in terms of an industry competitive analysis would be in that sort of framework. Again, taking Allen Corp, aka Delta renamed, one of the aspects you might want to look at is intangible assets. And again, something like notable brand recognition is something that gives companies a sort of moat. Again, like I said, as an individual going into an analysis for the first time, you don't want to discount anything internally yourself. So again, it's just that idea where yourself that, when you look at Coke and you look at Pepsi, you ask yourself, what's more popular? What do I see more? And you kind of get an idea of how notable brand recognition can play a role in sort of keeping a company, or rather keeping companies' products in the mainstream and keeping it going. Again, something else to look at is reputable corporate governance and, personnel and structure. Again, this is something you can find in a company's annual reports. Things like a quick search on who's the CEO, who's the CFO, who's the COO, who are the shareholders, who's running this company. And again, a warning, if you look at a company and you find that it's changing management every 2 to 3 years, that can be something that could actually take away from, I guess, total overall intangible assets. So something to keep an eye out over there. Again, switching costs, this refers to the customer and what it costs a customer to switch from one provider for products to another. Again, looking at something like beverages, it doesn't cost me anything to go into a shop and buy one drink over something else. I guess an example of a switching cost, again, which also touch on the network effects, would be something like a company that runs software, and for me to move to another software provider actually speaks to then sort of that process of uninstalling and installing new software and going through that process. So maybe for retail companies, switching costs aren't that relevant, and network costs as well. But again, you want to look at cost advantages as well. This again speaks back to the balance sheet where you look at things like capital expenditure and how efficient a company can be. But again, speaking to this example, one thing you do notice, especially in the SIM context, which is again what you're going to be looking at when looking at the ZSE and the VFX, Zimbabwe just happens to be a country where the cost of input, the things like cost of labor, the cost of your raw materials tends to be really high. So the cost advantage can actually be attacked by foreign producers who might bring their products into the country. So again, these are just broad examples of things you want to be thinking about and things that do then affect your company's sort of competitiveness in an industry. Just moving on to the next slide. Just in terms of putting it into numbers, when you look at an industry and how its competition works, I have pulled out sort of market share statistics for this fictional company that also happens to sell sparkling beverages, lagers, and chibuku. Yes, again, these are numbers. Again, you want to be looking at a trend in terms of how high is the number, the absolute number itself. Again, you can see lagers with this fictional company are as much as 96% market share. And again, another positive note to take is that as much as it's not changed much, it has sort of steadily increased from 95 to 96. Similarly, that top line of sparkling beverages has grown from 65 to 67. And again, that bottom line from 84 to 91. So again, whenever you look at a company, be it its own financials and its own sort of internal numbers, you do want to keep the context and again look at how these numbers compare to the rest of the market and how it faces up against competition. I know in the industry, a lot of competition has come in for these specific line items, but again, you can see that they've maintained that moat and maintained that market share. So again, that is another symbol of something you want to look into a company when you're doing your analysis. And then just onto the next slide, just sort of the last step or that top rank in the pyramid I showed earlier. This is now when you take, again, what we've just looked at, you take your historical results, you look at the trends you've just seen, and you want to use this to come up with forecasts and valuations. Because as much as a company may have great qualitative and quantitative aspects to it, when you want to come up with a buy or sell recommendation, ultimately it's going to depend on what the price of that stock is compared to what you think it is valued at. So again, in terms of coming up with forecasts, again, I won't go much into the details of how you get these numbers, but really when you're doing forecasts, one of the ways you can do it is you take historical base rates and sort of project those forwards. Or again, there's again that idea of your own analyst discretion. I did also mention here management guidance. And again, this goes back to management actually being open in this market. Again, in analyst briefings and in their reports, they do actually give you forecasts of where they expect their targets to be, both revenue and volumes for the next year. And these are things you would take into your input when you come up with your forecasts and your evaluations. So just the next slides is just a list of some of the things you might want to take into consideration when doing your valuations, again, for your equities on the VFX or the ZSE. I won't go into details about most of those, but I will give you an example of a discounted cash flow model and one example of a multiplier model and how you can take these numbers from any company's financials and maybe come up with price targets for yourselves as well. So if you go to the next slide, this is an example, a very simple example of just using multiples as analysis or coming up with a valuation or rather quick back of the envelope price targets. Again, if you look at my top line in terms of revenues, I've obviously taken my 2023 and 2024 revenues. Previously, I showed you a growth rate of about 30%. So in terms of my forecast for 2025 and 2026, I've maybe applied a more modest 10, 15%. This was also guided by having listened to management at their briefings. Because of that degree of operating leverage I spoke about earlier, I can then come up with operating margins staying relatively flat, but PAT margins growing marginally from where they are right now, 12, 13, to about 14, 15, and going forward. This then obviously gives you a bottom line earnings per share, which is essentially your net profits divided by number of shares. And in this example, I had about 8.5 cents. I won't go too deep into how to get an industry average PE, but again, usually in bigger industries, you can look at the ratio of a company's price to the company's earnings, and you get a broad sense of how the price of a company is reflected in its earnings. And again, once you have a forecast for the earnings, you just do some quick maths, do some multiplication between that 8.65. And again, this average PE ratio that I calculated at about 16.2. And you get an implied price of about $1.40. So again, while that might be a bit technical, it's not by any means difficult. Again, this is just taking what you saw from the historical trend and translating that into numbers and into forecasts. And once you do have a sort of implied value estimate, again, in the context of the characteristics we saw before, you then look at the current price. I guess in this example, at the time of writing, current price was just under $1. and that implied an upside of about 44.3%. Again, I think in Vanessa's presentation, she did speak to past performance, not always translating to future performance, but this does give you a guideline in terms of what you can maybe potentially expect. It might not be in the next 6 months, might not be in the next year, but again, you do see that divergence between current price and where you think the price should be, or where the market says the price should be, and that does give you some confidence in terms of potential capital appreciation and that whole aspect of fundamental or value investing that was talked about earlier. To go to the last slide, this is again just a final example, like I said, of a discounted cash flow model. I won't go into the details of the numbers, but again, I will share this presentation with anyone interested, as well as I'm open to, for anyone who wants to reach out and maybe understand something like this a bit more. But this is just a more rigorous approach to come up with a fundamental value or estimate of a company. Again, as we talked about, it starts from that revenue. So again, as I'm projecting revenues in this very simple model, this is my sort of revenue growth trends are again based on the company analysis that I would have done, and again, my projections of volumes. So you find that it all does actually come down to that initial understanding of what are the drivers of revenue, what are the drivers of those profit margins, and then some technical maths spits out a company value for you. Again, once you have a company value divided by the number of shares, and again, this model tells me that the intrinsic value is about 1.3. Usually what we would do in our industry when we do a company analysis, again, as you noticed, this model gave me 1.3. The previous model had a number for 1.4. And there's about 5 to 6 different models you could potentially play around with. And what you would then do is maybe come up with an average. And again, this helps make your analysis more robust and helps you in terms of coming up with your final recommendation. So again, in terms of a fundamental analysis, what you're looking for is strong moats, strong revenue growth and strong volumes growth, as well as a price that's below what you estimated to be. Again, that was just a quick overview. And again, I'm more than open for anyone who has more questions and would want to know more about this topic, but I did keep it quite high level. And again, would emphasize that the most important aspect of this is that initial sort of understanding of revenue and drivers and where a company is going, as well as your understanding of a business as a whole. I think that's it from me. Yep, I'll hand back over to Terry.
All right, great. Thank you so much, Tinashe. I think that was a really great presentation, and definitely, I think overall I can applaud all three of our speakers that was a great value add, and it was worth the time for sure. So I will firstly let everyone know that we will be sharing the resources from this presentation or webinar rather. So sometime during this week, you can expect an email that will entail both the recording and the presentations. So before we wrap it up, I am now going to move into the question and answer session. So I'll firstly handle the questions that are in the chat box, and if there are any other questions that you'd like to ask, you can press the raise button right at the top. And once you press that, then we'll give you the permission to have access to your mic and speak. All right, so first question. What are the requirements for an investment company for registration on VFEX Direct? I think this question goes straight to Rumbizai.
Thank you so much, Terry. I'm going to answer according to how I understood. So I'm thinking it's either you want to register for VFEX Direct as a client, or you want to be part of the companies that can be traded through VFEX Direct. So from the first one, VFEX Direct is only for individual clients. We don't have any companies that come through and register on the VFEX Direct. And the other part of the question that I'm thinking could be, what are the requirements for investment company for registration? So if it's now a company and you need to register for trading on the VFEX Direct, you will need to get in touch with our legal team. There are rules that you need to follow. There's a lot requirements that you need. So I think getting in touch with the legal team on listing would be best for you. I'm not sure if I've answered your question.
All right, great. Thank you for that, Rubitai. I believe perhaps, Almond, if you haven't necessarily been answered, you could always just type in the chat box and then we can address that. Also, just to touch on the last part that Rubitai addressed, if you'd like to find out how to list on VFX, perhaps you own a company or maybe you have a product that you'd like to list on the VFX, you can also go onto our website, and from the website, you will be able to see the requirements, the listing requirements. All right, so moving on, the next question I believe also is for Rizai. It is a question asking, can one change their stock broker? So I think we'll be able to address it from here.
Okay, I'm not sure if you can hear me, but yes, you can change a stockbroker. You can definitely do that. You can just send an email to the VFEX Direct at vfex.exchange. You can tell us the reason why you need to change your stockbroker, and we can do it for you.
All right, great. That's quite straightforward. So I will also just be typing the email address for VFEX Direct into the chat box, and you can just follow that. Then the next question is, does residency need to be in Zimbabwe? I believe this is from when Rubitai was speaking about how you can register on VFX or VFX Direct.
Okay, thank you, Terry, for that question. Residency does not have to be from Zimbabwe only, because VFEX Direct is an international application. You can use it from wherever you are. The only thing that needs to be from Zim is the bank account. It needs to be a Nostro local account. Right now, we don't have Visa, we don't use MasterCard. So for the moment being, you just need to have an account from Zim, but all the other details don't need to be Zimbabwe details.
All right, great. So the next two comments were constructive comments that we have received, and we definitely do value your feedback. If there's any other feedback that you'd like to give the VFX team, please do go on and send us an email, and we'll be able to address that. So I see suggestions on adding other platforms for deposits, which is great. We'll definitely be looking into that, and some of these things are already in our pipeline. Then the next question is, if a counter migrated from ZSE to VFEX, how do I claim my shares? And it's a two-part question, and I believe it then goes on to say, after a counter migration and an investor registers on the application, is it not possible to automate the shares to appear on the portfolio than the back and forth to claim shares previously held at ZSE? All right, I think I can take this one whilst I settles on a device. So you can, so currently actually it's already been automated. So you actually can allow for the migration to happen from your side without contacting VFX. So if you encounter any issue, then you can contact VFX. So how it has been automated now is you need to be an investor or actively trading on ZSE Direct. So we have added a new button on ZSE Direct, and there's a selection or corner where it says VFX. And once you click that button, then you will be able to process a migration of any shares that you held that have now migrated to VFX. If this hasn't happened for you, perhaps you're not using ZSE Direct, firstly, we encourage you to also use ZSE Direct as you are using VFX Direct. It just allows a better continuity between the two platforms. However, if you are not, you also can contact us. So you can use ZSE Direct at zse.co.zw or VFX Direct at vfx.exchange. I will type both into the chat box, just not at the moment, given I will lose track of where I am with the comments. All right, so the third question now, I think I can pass that forward to you, Rubitai, which then reads, from VFX perspective, what are you doing to increase trades and also ensure investors are lured to the stock markets?
Okay, thank you, Terry. So before I answer the third question on the migration, the other reason why it could not be automated, let's say for a certain client, It means that when you go on the VFEX Direct, you don't select the same custodian as the one that you were using on the ZSE Direct, the one that holds the counters that you had. So what you have to keep in mind that if the counters have migrated and you have a VFEX Direct account now, you will, if you want it to be automated into the system for you onto your account, you definitely need to select the same stockbroker that you were using on the ZSE Direct so that the process is flawless. But if you don't select the same stockbroker, it means that you need to communicate with us. After you've communicated, then we can either transfer the shares to the new account, or we can use, we could then change the broker for you on the platform. So for the next question, it reads, the third question, from the VFEX perspective, what are you doing to increase trades and also ensure investors are lured to the stock market? Okay, so from my understanding, as the ZSE, we have enhancing visibility on outreach. We have been trying to get clients through either social media. We've been using client engagement systems. We've also been doing investor education, whereby we've initiatives whereby we have these webinars. We have we go to different schools. Whoever requests for us to go there, we could do that. Since the VFX, it's not fairly new. It has been in existence for, I think, about 3 years now. So we're trying, of course. And I think the other thing that we do is we try to have partnerships, either be financial institutions, other exchanges. We talk to other exchanges on how we could improve. So I think the basic communication with other exchanges, also the market infrastructure and the introduction of new products. So the ability for us to introduce new products also leads us to getting more trades, because people are now invested and they want to know what the stock exchange is about. So the market infrastructure basically is upgrading, the continuous upgrading of our platforms, the settlement cycle, the system, the market data services that we offer as well are able to help us increase the trades. So I think these are most of the activities that we've been doing as the VFEX to be able to increase the trades on the VFEX. I hope I answered your question, Vincent.
Okay, I think Rumbi can also then address the next question from Kudzai on Zipit, whether Zipit is acceptable when making your deposit.
Okay, so Zipit is not acceptable because already when you're transferring USD to another USD account, it's RTGS transfer. There's no Zipit for US dollars. So I think this goes back to the financial institutions where they haven't had that system whereby you can just deposit, you can just transfer through Zipit. So right now you can use only RTGS transfer and inbox. I'm not sure if there are any new developments that are coming up, but for now, yes, you can't use Zipit.
All right, great. Michael Nyoni, I've responded to your message. Kindly just send an email to VFX Direct, and perhaps we can then work on your matter. And the next question from Andrea says, do we just pick any stockbroker, and should they be pre-notified? So when you're choosing your stockbroker, simply you can go onto our VFX website, and we have a list of all the stockbrokers that are licensed by VFX. So you get to choose the stockbroker that interests you. Unfortunately, we cannot tell you what stockbroker to follow, because as an exchange, we're supposed to create fair ground, trading ground for all market participants. So we cannot recommend any broker. However, you can then go onto our website, look at the brokers that are listed, see who probably interests you the most, and perhaps you can look at their website. Maybe you can also call them, or just go to view their offices, or to speak to someone who works there, or also just hearing other people who are trading, how they've experienced some of the brokers. And once you have done that, then maybe you have a clear idea as to who you'd like to be your stockbroker. However, when you're registering on VFX Direct, you need not notify the broker before you select them as your broker. They will get your application. So the notification that you want them to be a broker, they will receive it once you have completed the notification on VFX. So it's automated. They also get access when they have been selected as the desired stockbroker. I will then move on to the next question that says, how do we, oh, all right, we'll be sharing the presentation slides. And actually, good question. There are some people who have attended the webinar who had not registered for the webinar. So if you hadn't registered for the webinar, kindly just send your email address to me, because we won't have any way of getting your email address. So I have just attached my email address at the bottom of this chat. For the benefit of those who might have missed it, it is tmonemo@vfex.exchange. So you can just send me an email and I will add you to the mailing list that will be receiving the presentation and the recording, so the resources from this webinar. Then the next question, I believe this is highly likely going to be for Tinashe. So it reads, so the valuation models presented here on analysis are too technical or needs CFAs only. Are there no models or ways for a non-finance person who is interested in investing and analyzing these listed companies?
Yeah, sure, I can take that. Yeah, thanks for your question. I do understand how technical some of these things do get, but I wouldn't say it's something someone needs to have a CFA to be able to understand. Again, when I was presenting, it was a bit of a summary, and I think given more time, it would actually be very easy for someone who might not have a financial background to understand it. But also I'd add that in terms of coming up with, say, a price target and evaluation, that's more like the end bit of your company analysis. And you find that in terms of understanding a company and some of the qualitative factors, which don't need a model per se, those can actually be just as important in terms of finding a good company that you understand, that you think could have growing revenues and growing profits without going into those technical details. But I guess in terms of needing the numbers and coming up with, again, price targets, those tend to be where the technical aspects come into. And also, just as a recommendation, maybe if you think yourself you aren't quite there yet, I did mention sell-side reports, which would actually, for the most part, have some of this analysis done by professionals and presented to you as you sort of learn to, I guess, pick up and do this as as you learn yourself.
All right, great. Thank you so much, Tinashe. I think you have addressed that one. So I see here, Almond, you asked a further question and you were explaining how you are a group of individuals and 6 individuals, and you are intending on investing together. I see also your hand is up. Would you like to explain that further?
Yes. Hello, can you hear me?
Yes, I can hear you. You can go on.
Oh yeah, I just wanted to say, in fact, yeah, like I was saying, we are like 6 individuals that are putting money together on a monthly basis, so that we invest it on the stock on VFX. So I wanted to find out if that's how we register in that particular case, because we cannot have share certificates for 6 people or something like that buying the same counters.
Okay. Sorry, perhaps you can elaborate a little bit further. I'm going to give this question to Rizai. However, you were saying, so the 6 of you, you're coming together on a monthly basis. And what counters are you interested in investing in? Again, I didn't quite understand.
The top tier, the Inscores, the Simbisas, the Deltas, the ones that you were talking about, the one that perform very well.
All right. So what I am understanding from your question then is you're wondering if, as a group of 6, is it possible for you to register an account on VFEX Direct and start using your group money to invest in counters?
Correct.
All right, great. I think Rupita can handle that.
Okay, thank you so much, Terry. So from what I've said before, I say this is an individual account. So by individual, I mean this is a 1-person account. I think you can only do this through a stockbroker where you have a joint account, which has different people. Because on the VFEX Direct now, it becomes tricky because you don't know who's going to log in, you don't know who's going to then sell. So it's not permissible on the VFEX Direct because even the details that are provided are for one individual. So I'm not quite sure I'm not quite sure how you've been doing it, but from what we know is it's an individual account. Only one person is supposed to access it because whatever then happens in the account should be done by one person. So it's always easier for you to just do this maybe through a stockbroker, to have a joint account, to do this through a stockbroker where you guys can have control over the shares that you already have.
Okay, because we had already formed a company for that purpose. Can't we register maybe as a company through the stockbroker, like you say?
Yes, as a stock, yes, you could do that through the stockbroker. You can register as a company. Right now on VFX Direct, we don't allow it. So, but if we have now the feature to have other corporates come in, I think you can then do that. But for now, you can only do it through a stockbroker.
Okay. So I was now asking for those requirements for that registration.
For that registration to the stockbroker.
Yeah.
Can you please give me your email? And then I think you can just put your email in the chat box if that's fine, or I could give you mine in the chat box. You can
That's
just
fine.
then send an email to me and then I can respond with all the requirements that you need.
Oh, perfect. That's fine. Thank you.
All right, you're welcome.
All right, great. And I believe earlier on there was also a question about what VFX and ZSE will be doing or are doing to engage with, clients and investors, etc. I think this is obviously a very clear demonstration of how we are building our bridge in order for us to engage with our investors. And I think Almond and Ruby's conversation is definitely testament to that, which leads me to the next question, which reads, what could have been the major drivers for ZSE and VFX performance in quarter 2, 2024? So something that we also encourage you as investors is to follow our social media platforms, because often on our social media platforms, we prompt you as to any notices that are on our website. So the notices on our website play on both sides. So it is either going to be your notices from the listed counters, or it's also going to be notices from VFX itself. And one of those notices is our newsletter. And I think our newsletter really gives you a good capture of what the quarter was like, what the quarter performance was like. But I think one of the most obvious things that we can definitely point out is the currency conversion that we had in April. So you definitely would see that there was a slight response in the market, that the market actually on both exchanges, so your ZSE and your VFX, they both had a response. Because remember, if we look at perhaps the presentation that we got from Vanessa, there's definitely behavioral responses when it comes to trading as well. So there was a slight influence in that, but we quickly managed to gain back a bit of stability and usual performance on both counters once, everyone was more settled in the new currency. So I think that's probably, if we're narrowing it down specifically to quarter 2, I think that's probably the major event that definitely influenced the performance on VFX or ZSE or both. Then I will also just highlight again that I will be sharing sometime end of this week the resources from this webinar. So the resources being the recording, presentations, and emails of all the speakers, as well as the main contact emails, group emails for ZSE and VFX. The next question is, why not combine VFEX Direct, ZSE, and ZSE Direct like on C-Trade? Isn't it all the same thing? So I think I can quickly answer this question. So on our end, it's mainly because we're trying to show or to distinguish between the two counters. So the two exchanges, pardon me. So when you're looking at our two exchanges, they are offering different counters are listed on them. So that's also why then we have two different platforms. However, you will also notice that our platforms, if there's any need for the counters to have any interaction, our two platforms are actually somewhat connected, like I was explaining earlier on about how when a counter migrates. So that's the business model that we have seen to work for us at the moment. However, we never turn away any feedback. Perhaps you could also just send us a more detailed explanation as to exactly what you are missing from our platforms versus C-Trade, and then we can definitely look into it because we definitely value your feedback and input in all of the things that we do here at the exchange. Then Shingarai's question, I'm not sure if it's a question. I'm going to read it regardless. These investment platforms have been too exclusive, catering only to the elite. However, there are likely thousands of people with extra funds who would be interested in participating in the VFEX if given the chance. The VFEX should aim to improve its visibility efforts to reach the wider pool of potential investors. Okay, thank you so much for your feedback on that. I think we are trying as much as our best to reach out to as many people as possible, as was highlighted by Rubitzai, that we're also engaging with investor education, and our investor education usually takes us far and wide. However, perhaps thank you so much for your assessment. We would definitely be looking into that. The next question is from Talent, and it reads, are there any new listings that we can expect on VFEX in the near future? All right, so we have things prepared for you in our pipeline, and I think also maybe we can take this opportunity to highlight that we issued regulated CFD trading on the VFEX just back in May. So if anyone is perhaps interested in that or is not necessarily up to speed with that, you can also refer back to our social media platforms and you learn more or hear more and understand more on CFD trading. However, as for new listings, I unfortunately am not necessarily at liberty to disclose. However, we do have products as well as other ventures that we are working on. Next question reads, how does one move stocks bought from a different broker into my VFEX account? For example, those which moved from ZSE to VFEX when I joined and didn't have a choice of a broker. All right, I think I can forward this question to Rubitzai to address.
Thank you, Tari, for the question. So what you do now is if you have a specific broker that you want to use now, you need to communicate with the broker and create an account. After you've created an account with that specific broker, you then go to the already existing broker with your account and communicate that you would like to move your shares from the old account to the new account. The broker will fill in certain forms for you. After they've done that, they then send those forms to the depository. After they've sent them to the depository then changes the ownership. As long as it's under the same name, it's just changing, it's just the migration. So I think just communicating with the new broker that you want a new account, then communicating with the old broker that you need to move your shares from this specific account to another account. So it's basically communication from you to the stockbrokers that you will be using.
All right, great. Thank you so much, Rubitzai. I see there are no more questions in the chat box. I will take our final question from Moses.
Thank you so much. I would want to know when using brokers, if I'm on ZSE Direct and VFX, do I have to use the same broker or I can easily use different brokers on the two platforms?
All right, thank you. I will forward the question to you, Rubitzai.
Hi, Moses. Okay, so you don't necessarily need to have the same broker. You can have different brokers since the VFX and ZSE are separate exchanges. So you can definitely use different brokers for those two applications.
Okay, thanks.
All righty, I see we have something in the chat box. Yes, so last question for Vanessa on investment strategies. How do I go about diversifying my portfolio when there's limited option on the VFEX or ZSE?
Thank you, Tinashe, for the question. So I think for for counters that are on the ZAC, we're fortunate enough that we now have a lot of exchange traded funds on that platform. So that basically is an ETF. An ETF is a basket of shares. So you can buy one unit and it gives you exposure to like, let's say maybe 4, 5, or at times 10 shares at a time. So I think that's one way to go about the diversification on the ZAC. But that being said, I do think that there are always pockets of opportunity if you look hard enough. And like what Tariro was saying, that we do have a lot of research houses, quality research houses on the market, IH being one of them. So we do keep you updated on where you can find, these nuggets of opportunity where, maybe like the price versus what it's worth do make sense. And then on the VFEX, I do think that for the most part, most of the counters have been trading way below their target prices / what they're worth. So I think, especially on the VFEX, there's a big chance to diversify there. Thank you. And yeah, that's my answer.
All right, great. Thank you so much, Vanessa and Tinashe, as well as Rubidzai, for speaking during this webinar. Thank you so much for everyone who put aside their time to be in attendance today. We definitely do not take that lightly, and we appreciate the presence, and as well as engaging us with the questions in the chat box, as well as raising your hands and engaging with us. We definitely appreciate that. And I think that brings us to the end of our webinar. I also would like to encourage everyone who's attending today to take the advantage of having been exposed to industry professionals, namely Vanessa, Tinashe, as well as Ruby. So I think maybe Vanessa and Tinashe, you can just type your email addresses in the chat box and people can access you if they need any more assistance or help with anything else. Again, do expect an email from me sometime end of this week, if not beginning of next week, that will entail all the resources from today's webinar. So yes, I think that brings us to a conclusion. Thank you so much for attending today.